Hi guys, thanks for tuning in to another episode of Nuggets News, or our monthly commodities update with our friend Marin Katusa, all the way on the other side of the world. How are you, Marin?
Excellent. It's been a while.
I know it's been a few months, and you're just saying that you've been in, I guess, stealth mode. I think it's always good when the people that are heavily involved in the market just sort of have some time off when it's correcting. And gold and silver had that huge run; they've been correcting a little bit, and everyone's sort of waiting to pick the bottom and waiting to buy their favorite stocks and all that sort of thing. So, what have you been up to?
So I've been very busy, site visits included, and quarantining. But we've taken free rides, what we call the Katusa free ride, on almost actually in every stock in the gold sector and energy, other than one that we haven't. So I've been very quiet the last 6, 7 months, and thankfully my subscribers have been very patient because they're waiting, and I've got the alligator style. But today we just did a financing, and it's the largest one of the year in the Canadian markets, and it's alligator time. And it's been a while since I've bought something in size, but you pick right, you sit tight, and it was solid 5, 6, 7 months since I've bought anything. And that's how you play this game. It's a cyclical game. You stick to value. And when, we took our free rides on all these stocks when they started touching 1.2, 1.3 times NAV. And now that they're trading at, zero point 0.6 NAV, you buy. That's the time to buy.
So things have been going well, taking profits and stuff in gold and silver. Energy sector's still been a little bit beat up. Lots of mergers and acquisitions. What is going on there? Is it like a little bit of this ESG? There's been even banks saying that they're not going to fund any of these projects anymore. So what are you seeing in that space?
Well, the banks that are already invested in a lot of the loans, they're going to have no choice but to roll over these loans. Where we got to pretend, extend, and the bankers are going to be taking these things over, so they're going to try to work their way out of these things. But they're going to have to continue that loan extension program. Now, what you hit the head on the ESG is totally true. You look at the flow of funds, and the irony of all this. If you look at the largest recipients of the flow of capital of these ESG ETFs, they're not these green energy companies, which you would kind of think would be the biggest recipients of this. It's actually Apple's number one. Then you got Google, Facebook, and even Home Depot makes up the top 10. Home Depot, I don't know if you have them in Australia, but in North America, it's kind of the big lumber yard, and where you go for your do-it-yourselfers to buy tools and things like drywall and paint and all those types of things.
Yeah.
So, you start sitting there, and Tesla's in it. You can argue Tesla on that. But this ESG movement and the coming Biden stimulus has created a situation where the EV sector, for example, the component makers and some of the car makers, historically ICE, internal combustion engines, traded anywhere between zero point 0.4, so zero point 0.4 to zero point 0.8 price to sales. Tesla's hovered around 6 to 13 at its peak right now, price to sales. It's always carried a premium because it's technology, blah, blah, blah. Right now, the average is north of 75 in the EVs minus Tesla. That's never happened before. 75 times price to sales. So these projections of these companies, first of all, I've never seen a startup actually underestimate its future sales, first of all. Okay, so you know that these are lofty to begin with. But even if they get the sales that they project in 5 years, they're still going to be 30 times price to sales. This is insanity. So, be careful where this flow of capital has brought things to unrealistic proportions, and hopefully the people watching this don't get caught up in that, because right now it's been kind of this gold sell-off on the equity portion. Even though gold is still 18 and change, we're buying gold stocks that are producers or permitted near-term, big ounces in the ground, de-risked with permits at zero point 0.6 times NAV. That's what you want to be putting your money to, not chasing the fads and the hot money, which is going to churn quickly. So I see a lot of risk in the market right now, and I'm just starting to nibble on the true value plays in the gold sector.
And do you think, are you of the opinion that there's nothing too special about Tesla once everyone else starts making their electric vehicles and, China start pumping out theirs? They're just not going to be as dominant and they don't have a lead, or do they? Are they unique because it is software? Is there something different about Tesla?
There is definitely something different with it. He's a personality. He's a cult following. Can you name the CEO of GM or of Audi or a Ford? Well, no, right? Elon Musk has this cult following, and he's a guru to so many people. So you're going to have that following, and they do have a head start because there's a culture at Tesla and the buyers of Tesla. It's kind of like an Apple, right? Apple always had that guru factor with Steve Jobs, and then they lost their belt. And when he came back, you always had the customers of Apple. So that's kind of the best comparison I can give to it. And I do think they have a head start because the Chevy Volt's a piece of shit. Like, you don't want to be driving it around, and Tesla's kind of cool. All right. Now, do I think that the BMW and, the GMs are going to catch up? And, they're trying to, you saw that the big Hummer came out fully electric. So they're going to catch up. There's no doubt about it. And those ratios and margins are going to be compressed. Hence why I'm, talking about these numbers are so unrealistic. But you've seen also a lot of other metals be beneficiaries of that. Copper's been a big beneficiary. I cut my teeth in the industry by being one of the founders of Canada's third largest copper producer. There's no shortage of copper. Now, before there's a shortage of copper, there'll be a shortage of clean concentrate of copper. And we can ever get into, if any of the copper nerds want to get into the details of it, but there's no shortage of copper. The question is at what price. You can bring a lot of production on at $4 per pound. So be careful on that game. Lithium's also had a great run. I'd also be careful there. On the rare earths, one of the companies we talked about at $10-11 has over doubled. The valuations, because of this ESG money and the stimulus, it's gotten crazy. So in my newsletter, I said, make sure you're locking in gains. One of the spinouts, just to put it in perspective, I think a year ago, you and I, or maybe 2 years ago, we were talking about at the time, my largest gold pick was Equinox Gold with Ross Beatty. We owned a copper company that you got for free in it. Today, the market cap of this copper company that got spun out to all the shareholders of Equinox, so like all of my subscribers, and we got this spin out for free as like a dividend. The Solaris copper company, and it's run by Richard Warwick and Dan Earl, who's a former analyst. Good guys, smart guys. Don't get me wrong. I was a big fan of it. But it has a bigger market cap than Equinox Gold had 2 years ago. And it owned 100% of it. Does that make sense? So I've sold all my shares in Solaris, and I've advised all my subscribers to do the same too. The market's very cyclical. It's got over a $600 million market cap right now. Incredible copper projects, but we talked about that for the last 5 years. So you want to buy things when they're on sale, and when you're buying at intrinsic value, at a discount to its intrinsic value, at a discount to the commodity price, and you get all that upside for free. That's how you succeed in the resource game.
Just a little bit of a tangent, but I guess this does relate to the golds and the juniors and the ETFs and Tesla. I think that we've definitely got that luster and just that retail investor that's on Robinhood, and they love Elon Musk, and they're on Twitter, and they're just investing solely based on the brand and the logo. Do you think that gold ever goes down that path at all, where it becomes kind of like, fun, and it just doesn't have that sort of, gold community on Twitter and the logos and the names of the gold stocks? But can things still get really interesting and, bubbly when we have maybe a few more ETFs, junior gold ETFs, silver ETFs, and we get the momentum and we get the, all those stocks being stuffed into those ETFs? I think we had issues in the past, didn't we, with GDXJ not having enough juniors. Do you see, like, there's just so small at the moment, and there's a lot of money going to come in, that things are going to get a little bit funky and euphoric and different like we've seen in other sectors?
I think at that time you want to sell, and it probably will come, but not for many years. The game has really changed. Not just the ESG factors, but the flow of capital. Over 50% of the money in the market is passive management. And the passive funds just can't play the junior resource sector. Like, again, if you take every gold company that produces, has royalties, developers, mid-tier, seniors, explorers, create one company, it's still smaller than any of the FANGs, just any one of the FANGs. So this is a really small niche market, people, it doesn't have the cult of, say, crypto or Bitcoin. It doesn't have those personalities. it's old, crusty white dudes who've gone around the world and explored and developed these assets. They've had the NGOs attack them. And I think before it gets to that point, you're probably going to see, my whole swap line concept play out, where you're going to have governments increase their take on whether it's environmental reasons or new taxes. You see it with the ESG. You got the greenhouse gas coming in under Biden. So what does that mean? So someone like an Exxon is going to pay somewhere around $3.5 million a day in new taxes to pay for their the greenhouse gas emissions, right? So if you look at, for every barrel of oil produced by Exxon, it's almost 200 pounds of greenhouse gases. So for every 10 to 15 barrels, they're paying $15. That's a nice, that adds up to about a quarter. If the taxes in the US go from $15 to $50 per ton, at $50 per ton, that's about a quarter of their dividend payout goes to greenhouse gases. So you're going to see more of that in the old industries, in coal, in oil, natural gas. On the mining side, you're going to see, specifically in the golds and precious metals, copper, in these riskier jurisdictions, the governments are going to take more, and they're going to say it's because they're not getting paid enough. And what is a foreign-run mining company going to do? So now, more so than ever, ironically, this political risk isn't being priced into the valuation models. Now, why is that, Alex? Well, when I started 20 years ago, a lot of the analysts who were really established at the time, they lived a really rough bear market. Now, during that time, banking fees exploded, and a lot of the analysts became bankers or went up to the management side of things. And with the big wipeout between 2012 and 2016, a lot of the experienced analysts moved on. So the younger analysts stuck around. They haven't lived through the cycles. And, they're valuing things, say, somewhere in Africa at a same discount rate as Nevada, or as in Australia, or in certain parts that are good in Canada at the same discount rate as something in like Zambia or DRC. It just doesn't make sense. So that's part of the reason. And there's a very complacent market right now. So do I see gold becoming cool with the millennials anytime soon? No. I think Bitcoin has that market cornered pretty well. But gold, we don't need $2,000. Right where it is, this is incredible cash flows. If you're just a conservative value investor, this is the best market right now of any sector in the world.
Yeah, it's interesting. We see that a lot at the moment on social media, that Bitcoin is stealing gold's thunder, but there's trillions of dollars, and Bitcoin's moved a couple of $100 billion.
There's room for both.
Yeah. One thing that I'm not sure if you're aware of this, but to do with your swap line argument, did you see that Iran are talking about using Bitcoin to get around sanctions?
Yeah, but the problem with that is the way the sanctions work, whether you're in Australia or Canada, anyone within the system, yes, you can move it, but if you're now participating in that, you could be forbidden from doing any business or traveling to the US. So there is some serious issues with anyone trying to play that. Let's see, Iran's kind of where North Korea is on, threats. I think with Biden taking over, I think the Iranians are ready to do a lot of concessions to probably get back to where the sanctions were in 2015, and hopefully get back to where they were in 2012, even before. I just see, with Saudi Arabia and Qatar doing a peace thing on the airways, on the airway passage. You see what's going on between Israel and Saudi. I think it's just a matter of time before Iran is isolated and forced to concede. And you look at the median average age in Iran is about 30, 32. Their post-secondary education rivals Australia or Canada or the UK. From a percentage wise of their population, it's ready for open markets. It's going to take many years before the markets believe that the authorities are going to concede and stick to the rule of law, the international markets. But it's I've never been to Iran. I was right on the border of the Zagros mineral belt when I was in Iraq, but I've spent a lot of time studying it, and it's incredible potential just waiting to be tapped into.
Yeah, it's almost like another side effect of the liquidity that central banks have pumped in, that everyone wants a piece of the pie when times are good like this. And it reminds me in Aussie rules football when there's a fight, the umpires throw the ball up, and everyone kind of wants to get on with it and keep playing. And it's a little bit like that. What's the point of going to war and sanctions and all that if there's all this money, all this capital, you can bring your middle class, out of poverty. And I just think that that's what we're kind of well, that's what you just described, isn't it? Like, let's get on with it.
Like, can you imagine that, me when I was at UBC, like, so my undergrad degree, my first degree, um, so many Iranians that, like, my GP that saved my life was Iranian. So many Iranians I knew were so educated, and as you start studying Iran, can you believe that the average salary in Iran is lower than in Vietnam? Like, that kind of rattles your brain. You just wouldn't assume that, right? But you're talking about a place that's just waiting to open up, and this young, educated, median age of the 30s. They want what we have, and they're capable of doing it, and it's just a matter of time, I think.
And just quickly, you sort of touched on the side effects of some of those Biden policies on Exxon and whatnot. Any other changes for uranium or the Biden presidency? Things that are just we'll dive into them more in future episodes. But just to,
So I think the one that I was the first to publish on, I got a big ego, so I love being first to concepts. But I've been a big investor in the green energy space for the last 5-6 years. And I created this thing called GBOs, and I published it. And a lot of people didn't get it, right? Because my audience is more mining, and they thought, Marin, green energy doesn't make sense. It's not economic. And I kept pounding the table for 6 years. It's getting not only economic, it's getting more and more economic every year. But when you think about where Biden's going, and, the far left and the Democratic Party, the older brass, the Bernie Sanders crew, they're moving on, right? And the younger crew, they don't remember the gold standard world. And I've got this idea, this framework, that the Democrats, the Hillary, the Biden, Bernie, they still play by the concept, the framework of we can't afford debt because of the gold standard rules in a non-gold standard world. But MMT breaks that, glass ceiling. And the younger crowd, and I'm going to use a personal experience. When I first started heavy in the exploration and development on the natural gas side, my mentor and partner, Rick Rule, at the time, I said, how do I compete with all of these guys on the conventional side? He goes, well, you got to figure out to do something that they don't know how to do. And that's actually how I got into unconventional energy, unconventional oil and gas, because all the older guys like Rick and his crew, they didn't know what it was. And that was the same playing field. So I went to the top published guys in the world, like Dr. Buston, convinced them to come work for me. And that's how we did Quadrilla, which became Europe's largest unconventional shale gas company. That's what I see happening with the AOCs and the younger breeds of the Democrats. They don't even understand the gold standard world. They don't get it. They don't care. MMT is going to be their conventional, kind of like how shale was my conventional, whereas the older brass was, what are you talking about, Marin? Fracking, horizontal fracks. What are you talking about? I think that's where it's going to go. And it's not going to be coal companies or copper companies or, oil companies that are going to get benefits of MMT. It's going to be the green energy companies. That's going to be a huge flow. So their cost of capital is going to be significantly lower than any of the other energy companies, including uranium initially. And let me explain what I think is going to happen. In the US, take Exxon, which is, historically, a Rockefeller company, the largest oil company. Well, its company is a market cap smaller than NextEra, the largest green energy company in America. That would be, when I talked about this 5 years ago, these companies laughed at me when I presented to the directors of the biggest oil companies in the world. And I said, you guys need to buy these green energy companies because your cost of capital is way higher. In Canada, Suncor is our Exxon. It's the largest oil company in Canada. At the time, its market cap was literally almost 10 times what Brookfield, which is the largest green energy company in Canada. Today, just like in America, the largest green energy company is bigger than the largest oil company. So Brookfield's now bigger than Suncor. Its cost of capital is way lower. And I eventually see in a market like this where the governments will backstop the green energy companies, they're actually going to buy out the traditional oil companies, and they're going to milk out that cash flow. And for every traditional barrel of oil, They're going to produce an infinite green barrel of oil, this GBO concept I have, and they're going to get a net tax credit because you can now offset the carbon, the greenhouse gas from the oil producers to the green producers, and the oil guys just can't compete on growth. So BP spent 3 days with their investors talking about we're going to be a green company moving forward. They can't compete. They've missed the window. Their cost of capital is so much higher. And the green energy company is all about cost of capital. And it's something I've published for over 5 years. So that's the biggest change I see in the energy sector when it comes to this new administration on the Democrats' side is the big push of MMT is going to become conventional. And it's just started. We're going to see more negative interest rates that I've talked about for the last couple of years. And people go, no, that's not possible. We've just started. And if you don't believe what's going to happen in the North American and European markets, just look at Japan for the last 25, 30 years.
Yeah, Steve Keen and I did an interview 18 months ago called Turning Japanese, and it's playing out that way. Australia, I think, is the one example that might be a little bit different. Everything you just described, I agree with, but we're like doubling down on coal, and it just makes no sense. We've started our 100 billion of QE. Overseas countries and sovereign funds have already said they're going to stop buying our bonds because we're not going green. So to me, we've got the easy money flowing now, but we're not going down the path of like ESG at all. And I just wonder where that is going to leave us. And
you're rattling the saber with China too, your number one customer. So you're kind of doing a whole lot of things wrong. But Australia has always been different. They had the 3 mine policy in uranium when there was the window for uranium. I've got lots of cousins and family in Australia. They're probably the most fun people I know to party with. But, I've always questioned the Australian what you're doing with coal, or if you look back at the uranium, the 3 mine policy, they've always missed the window when they could really tap into the market.
Oh yeah, well, you and I both love to talk about our big winners, but the worst investment I ever made was when I was getting into uranium and I had the FOMO, and I can't remember if it was Pendulum or Palladium, something like that. Anyway, it was the one that dropped 70% the next day when they announced that I think it was to do with Aboriginal mine site and it wasn't going to go ahead. And oh man, one of the worst investments I ever made because I wanted uranium exposure, and I learned the hard lesson about you don't get uranium exposure if the stock's not mining uranium.
I've had one stock that I've lost 100% of my money in, and it was actually in a crypto exchange. So I've learned to play in my sandbox that I understand. So I gave a good friend of mine a bunch of money to manage in the crypto game, and I got to tell you, to me, it's like almost financial porn when I look at my monthly statement with him because I put a lot of money in. Yeah. Some months he's up 46%, and I've seen months down 37%, which is risky. Like the mining game is risky, and we have crazy volatility, but I have never seen the volatility in the crypto exchange. So like I've said to everyone, you should have some gold, you should have some crypto, know the rules, play within them, but know your limit and never over leverage yourself, because cash, people hate when I say this, but you can't take advantage of opportunities. And there's something that I really spent a lot of time with my subscribers with, Alex, is, Marin, I subscribed, and when are you going to buy gold? It's $2,000. Well, when everybody's talking about gold, that's when I took a free ride. And now it's wild. I was on a panel with Ross Beatty and Bob Quartermain, 2 legends in the businesses for this big banking firm with all their top clients and family offices. And the interviewer, who was, I think, someone from CNBC or someone, kept going, but Marin, what about $2,000 gold? And I go, why are you so infatuated with $2,000 gold? We're at $1,800. And I remind, Ross Beatty is one of the richest people in Canada. And when we bought this gold mine, it was $1,180 gold. And we were walking to the coffee shop and we are just talking about the deal we just announced that day. And Ross goes to me, he goes, Marin, when gold gets to $1,250, this thing is a printing press for cash. It's $1,800 gold, so it's a super printing press. But for whatever reason, the financial media and everyone talked about, gold's biggest drawdown and it's GLD. Well, you're talking about a big, much higher price. It's all about, media taglines and catching the attention. $1,800 gold is fantastic. But it is competing for limelight with the crypto world, and it loses from that online exuberance because who invests in gold? Generally speaking, they're older individuals, specifically mining equity stocks, like mining companies. It's the older crew. Like Alex, you and I are one of the, we're a rare breed when it comes to investing in the mining stocks. You go to these mining shows, whether the ones I hold, it's a majority white-haired individuals, much older than us. There's going to be this huge transition of wealth, something like $10 trillion over the next 10 years, from the boomers to the millennials. The millennials, they're not going to be doing the research that you're doing. Most of them, they're going to go into the passive ETFs, and they're going to want that ESG factor, and they're probably going to play the crypto over the gold, right? So there's going to be this maturing of the markets, but changing in a way where, the gold equities are going to be really changing from not being able to compete with the passive management, and all these juniors who are out trying to explore, they have no gold. That market is shrinking, and it's not really increasing the inflow. What is happening is they're competing for capital from other companies. It's just company rotation within the sector. So the mining company as a whole, the sector is evolving. So you're going to see more consolidation to just, to get those inflows of ETFs flow, because if you're under 500,000 ounces of gold a year of production, you're not going to get much attention from the algos and the passive ETFs. That's just the reality.
Yes, I think we're at such an interesting time in terms of the investing world. What's going to happen with all these investing apps? Just it's the social media. Does ESG become like the cryptos with all the buzz and the advertising and the YouTube channels and podcasts? You just don't know, because that can really change an industry and the way people invest. Any final thoughts, Marin? I don't want to go too long today, and I really am looking forward to diving into some more of these specific topics in a month by month format next year. Because this year's been so fascinating, but it's kind of like paved the way for the future to change. Like we have, whether it's accelerated or changed it, it's been a massive year that's changed the direction the world's going.
I think everyone's talking about, like what you're mentioning is like the great reset. And what I've been trying to get my investors, I see a great rotation happening. And with the great rotation, you're going to see, like I've been saying how many times on this show, you don't need to take crazy risks in the mining game to get those big returns. It used to be that you'd have to go into these juniors and, take this exploration risk to get the 3, 4, 5 baggers. And I've proven it that you can buy an Equinox, which is producing, and get 4 times your money, because the game has changed. You see, it's the flow of capital isn't going into the juniors. They're going to the mid tiers and the biggers. And as the mid tiers start merging more, you're getting more flow of capital, and it's moving up. Stocks get to about 1.3 times NAV at, $1,500, $1,600 gold. You take a free ride. Then when they get to about 0.7 at $1,500 gold, 0.7 NAV, you start nibbling and buying and see if they pull back. And then there's a great trading range, and you don't like, I think of maybe 5% of my gold or resource stocks are exposed to what I call risky jurisdictions. And I have the top fund now 10 years in a row, and this year it crushed it. So you don't, I'd like to, you go where the great deposits are, but there's some incredible deposits that are trading at discounts in areas that you and I could put our kids in the back of the car and go drive to the mine. I don't need to put body armor on that I used to do 15 years ago because I was chasing this holy grail that, ironically, even if you do find it, the government will take it from you. So I think the takeaway of 2020 moving into 2021 is understand the jurisdictional risk and how the governments are going to change this game with new rules that aren't being priced in today.
Yeah, I don't think you would have got many holy grails better than some of the, like Northern Star or whatever in Australia, when they had like $1,000, $1,200 all in costs, and gold's 2,850 an ounce at the moment. What are some of the NAVs in Australia?
Guy. Yeah, so those are young guys. I remember I was with the president of Northern Star, and he's just a good dude. And we were at the bar, and he's just like, "Hey, do you want a beer?" And he's someone that you just know this guy's a winner. And when we talked about that and wrote it up, I was just like, this is, I called that the Commonwealth takeover. And we saw, like, at Northern Star, they bought out the Pogo mine in Alaska, and they see significant upside. It's young guys with new technologies and approaches, where the older guys are, kind of worried about new technologies. They're aggressive. They're willing to work crazy hours, and they're hungry, and they've become stinking rich over the last, 6-7 years. So again, the framework, find good people who are invested in their company. Northern Star went from a 20 million market cap to 2 billion in less than 5-6 years. That's phenomenal.
Yeah, no, 100x. It's been crazy. Well, guys, I'll put the links down below to Marin's free stuff and his premium research. We've got a discount for you guys, maybe a Christmas present as you do your gold shopping as well as all your Christmas shopping. But perfect time to wrap up. I think the little one's ready for a bath, Marin. But have a good Christmas. I mean, I can't believe how quickly this year's flown by. I think we've nearly coming up to our year anniversary of doing this. But any final thoughts for the year in general?
I think, look, the biggest takeaways, I've had a couple of friends that are passing away here, and, wealthy guys that puts things into perspective. What we do, we love what we do, but don't forget to enjoy life. But also, to have cash available, I can't emphasize enough, where people think, cash is trash or the US dollar is garbage. I can't disagree more, because this concept that I'll sell something to buy, when it's, in the resource sector, it's all relative. So always have some cash available, and don't be scared to take a free ride on things, because, I learned long ago that the management teams, when you get to the size of what I'm doing with a lot of these companies, they hate it when I sell. It pisses them off. But you know what? I learned, one of my mentors told me this 15 years ago. You want to buy the stock when they need you, not when you need them. And I guess I'd take away that. I think this market's going to see a lot of volatility in both crypto and in the gold sector. And we're at a market where valuations in certain sectors are getting so crazy that it doesn't automatically mean that those gains are going to flow into other sectors. Those losses can actually go to money heaven. It just evaporates. So be careful in what you're investing in.
Yeah. What have we got now? Janet Yellen from the Fed into the Treasury. Like, there's just going to be that much spending. I think it's going to be nuts next year, which is going to be good for crypto and gold and silver investors. So,
I agree.
Awesome. Have great. A good Christmas and all that, Marin, and we'll catch up next year.
All the best.
Cheers. Cheers, guys.